Hey, good morning, guys. Happy New Year to everybody. Sorry about that slight little technical delay there. Clicked the wrong button, but Happy New Year's to you guys. Thank you so much for joining me again today for another episode of Breaking Bitcoin Technical Analysis. Hopefully you guys had a good New Year's Eve last night. Hopefully you guys didn't drink too much. Hopefully you guys didn't party too hard. Again, I did stay up late last night with my kids. I was posting some charts in the Discord as well, posting some trade signals and setups as well. Just couldn't help myself. You know, one of the nice things about being more of a longer term trader is that I simply set alerts for key areas on the chart, areas of interest that I'm looking at, and when the qualifications meet my trade setups, I take those trades. So, all right, guys. So, how can I say this enough? I do want to give, just to start off the year, guys, I want to give a big thank you to everybody who has been following the stream, who has been showing up every day with us, just like I've been showing up every day for you guys. You know, this is my job. I treat it like a job. I treat it, you know, professionally for you guys. I'm here to analyze the markets for you and tell you what I see. And I just want to tell everybody that 2018 was a wonderful year for me, for the entire team at Kraken Cryptocurrency. So a big heartfelt thank you to all of you guys. I said the exact same thing last night to all the members, all the members of the premium trading group as well. They're all fantastic people. I am very, very happy to be working with them. They've been wonderful additions to the team, and I'm really pleased to wake up every morning and know that I've got a wonderful group of people to work with and that I'm working in such an exciting space. So again, guys, hope, you know, 2019 I think is going to be a fantastic year for us. 2018 was an amazing opportunity to sharpen our skills as traders and to learn and to master our emotions, to master our psychology, to redouble up on our efforts of discipline, to revisit the charts, to enhance our charting ability and our trading ability as well. And also just to learn a lot of life lessons. I think that we've had a nice clear out of a lot of the irrational exuberance that kicked off 2018. I think a lot of crap is being recycled out of the, or excuse me, not recycled, but cycled out of the cryptocurrency space, which is good. This is what I want to see. What do I think 2019 is going to hold in store for us? Well, I think that 2019 will continue to see a lot, a die-off, a mass die-off of a lot of the altcoins as the SEC kind of ramps up their regulation and enforcement. I think that most likely we will see more and more and even more institutional investment in the cryptocurrency space, specifically focused around Bitcoin and perhaps other blue chip alts such as Ethereum and Ripple. But as opposed to where 2018 was the year of speculation, I think that 2019 is going to be the year of actualization. I think that we're actually going to see things like Fidelity backed, all these big players get involved. I think we're going to see start to begin to see a lot of these retail packages, these packages that can be marketed to retailers. And that is going to be, as I've been talking about pretty much since March of 2018, that is going to be the impetus for the next bull run. You do have to have an avenue for your retail investors, for a larger swath of the retail community to get involved in a cryptocurrency investment sphere. And typically for that to happen, what you need to have is you need to have marketable investment vehicles for these individuals. So most individuals that are your Main Street type people, your mom and pop type people, these people would be interested in adding something to their 401k or their IRA, or, you know, you even have your younger individuals who are willing to take riskier, more speculative investments as well, but they're going to need some more reputable, more legitimate, more, you know what I'm saying, investment vehicle rather than just getting on Coinbase and raw buying a speculative asset in and of themselves. Most of them are uncomfortable with a situation like that. So we're going to be seeing these packages, these ETFs, these products, these derivatives. We're going to see them be launched throughout 2019 and 2020. And that I do truly believe will be the impetus for the next bull run. Do I think the bear market's over? Unfortunately, no, I do not think it is over at this point in time. I think that we will most likely definitely see I think that we will most likely see new all-time lows sometime in the first quarter or second quarter of 2019. I think that we will eventually drift our way down to 2,300. How long it takes us to get there, I can't say. Nobody can say. That is a key area of interest that I have on my charts. I do think that kicking below 3,000 will be a fairly strong bearish impetus. I think that we would be able to open up more directional shorts below that level. However, probably not on the first go through. I think that we will probably pull back to test 3K. We'll probably get a couple bounces off that level before it does end up breaking. So in that sense, will 3K act as the new 6K? Again, not in the same sense that 6K acted as a year of support. I think that we're going to see an accelerated market cycle, just as we've seen Bitcoin act as an accelerated market cycle for traditional markets and stocks. So, all right, guys, let's get into the charts. I want to say thank you to everybody for joining me again this morning. Again, Happy New Year's to you guys. 2019, we are here. We've made it. 2018 is done, in the books, penciled in, and finished. Jay Constant, Scotty Ogden, Mr. Decipher X, Ben Joseph, D7 Tom, Abu Farhadi, Nitin Soki, good morning to you guys. And as always, Scott, running the moderation, man. How are you doing this morning, Scott? Good to see you, brother. All right. So let's switch over to the charts. Yeah, thank you for correcting me. Gotta watch crypto. I did misspeak. Not new all-time lows, but definitely new lows for 2018, 2019. Thank you, sir. Correct my speech. All right, let's switch over here to the charts and see what we got going on. Not a whole lot of exciting things going on today, nor do I really expect them to be. I am trying to position myself for a better trade at this point in time. Again, I had posted out the signal to the premium members last night just as I was going to bed because some key factors did meet my qualifications for a setup here. I'll talk about those here in a second. Now, what do we see? Today, let's just take an overview of the day. Today is New Year's Day. It is a holiday. I do not expect there to be a lot of massive movement in the markets. Can we get a big move? Yes, we can always get a big move, but usually unlikely on holiday days like today. Again, the Asian markets are closed until Thursday, and the United States markets are closed for today. So the markets are closed today, not expecting a big movement. If we go over and look at CME, we filled the gap, not as much as I'd like to, but it's okay. Let's see here. Really, volatility, I don't think will probably pick up till tomorrow. So I am trying to position myself for a trade, but whichever way we do decide to go, most likely we will get a violent counter trend movement in the other direction. So what I had spoken about yesterday, saying that I was in a positional short yesterday, that was true. We did end up having that nice dump candle pretty much like right after the show, honestly. Which shot us all the way down back to really almost not quite pierce, but retest this supply zone indicated by the green box level. This level has been this level has been back tested once as support, so I would expect that to act as support again. We do have another area of support that has not as yet been tested down here in the $3,400 range. So those were the downside targets for the shorts. When we did take the short, we were targeting the distribution box area here, the midpoint in between the distribution box and the supply zone, the lower spectrum of the supply zone, and then also predicting a wick down below this. Those targets didn't hit, so I went ahead and closed out the XBT USD short last night. Now, in retrospect, would it have been also applicable to keep open the USD perp swap short open and hedge by taking a long contract on something like XBT H19? Yes, that would have been an applicable motion as well, but I just decided to keep it simple. We just went ahead and closed out the short in profit, and now we're looking for an opportunity to take this to the upside as well. Still working on getting our limit orders filled between 36 and 37. Now, small position size so far because obviously and overall the market is still volatile. If you go down to the smaller time frames, you can see that most of the movement that we're getting is on big, like 5-minute candles up, big 5-minute candles down. Generally, this is not the safest time to trade. When you're experiencing a situation like that, it's not the most secure position to trade. If you are sitting back, laying in the weeds, and you're waiting for a safer position to take, definitely do kind of just want to wait for the market to give you the clear signal. I had said yesterday that the clear, strong directional signal wasn't really posted yet, and it really isn't yet. But I'm just looking at the technicals of my chart and what it's telling me, and the fact that we have hit a key level, that we did kind of come back and repull and back test the support area. I would expect that we actually most likely get a thrust back down into that supply zone again to clear out liquidity, because even though you could look at this as a stop loss hunt of support, potentially possible right here, because we do pull back down and form the support right here after kind of messing around in the distribution zone. I would expect to see another down thrust down before the markets do end up making a move tomorrow. But I do think this is the time for the markets to make a move upwards. If we take the long-term view, let's go over to Bitcoin. I'm looking at the BitMEX chart there. All right, so let's look at Bitcoin spot. All right, so we can kind of get things all cleared out. All right, so nothing really has changed, honestly, with my long-term view of Bitcoin. We had talked about the kind of irrationality of the inverted head and shoulders pattern, how the volume characteristic pattern on it was completely wrong. The volume profile on it is wrong. Typically, when you do see an inverted head and shoulders, again, a couple things that point out to me initially about, or excuse me, the things that stand out to me that are negative about the inverted head and shoulders meme that is being painted for retail traders at this point in time is the fact that when you do get an inverted head and shoulders, it is a capitulation reversal candle, or excuse me, a capitulation reversal chart pattern. And as such, you expect to see capitulation style volume. So you typically see decent volume on the left shoulder, check. You see higher volume on the head. You don't see that here. And then you see higher volume on the right shoulder than you see on the left shoulder. And that is going to be indicative of accumulation. The fact that this is all played out as an accumulation chart pattern, and now we are primed. A lot of bullish volume would have taken place in the right shoulder, and now we're primed to actually break the neckline and have that nice measured move. That measured move is pointing us up toward that $5,500 area, which is also our previous point of control and our previous distribution order block breakdown zone. But we do not see that volume characteristic pattern. We don't see that volume on this chart pattern whatsoever. We see the highest volume on the left shoulder. We see very weak volume on the head. We see a nice volume on a rally upwards, which is not the way that you see the volume on an inverted head and shoulders. You want to see strong capitulation volume on the downside, telling you that a lot, pretty much that everybody who wants to sell has sold. But we don't see that here. So I still think that there are a lot of sellers left in the market. We still have a lot of potential sellers. That does not bode well for Bitcoin. So I do think that we will most likely see, we've had two tests of this descending trend line right here. So measuring from the true candle highs. Measuring from the true candle highs of our last two rallies. So we had our last rally that rallied up and made a high of 4,409. We had our second rally, which we just experienced, which made a high of 4,236. And I would expect us at this point in time to get another rally. Maybe it goes on. Maybe we go sideways here for a few more days, possibly even the rest of the week. But I would expect that we do eventually get a rally back up to that $4,100 period to put in a third lower high. That for me would be most likely, or excuse me, not most likely. That for me would be a confirmed kill, 3 touches on the trend line confirmation, and a strong entry for a directional short. So still looking at that area from 4,000, excuse me, we're going to have to go over to the BitMEX chart and minus $100, but still looking at that area. Actually, excuse me, at $100. Yeah, between 4,000 and 4,100, potentially even 3,900, to be looking to enter into directional shorts. Trading underneath the point of control currently, still just in a consolidation pattern. Again, very weak volume on today's candle with the markets being closed. So not expecting a lot of volatility today, honestly. Lowering volume as we're moving into consolidation. This is characteristic of what you do see in a consolidation period before you do get a high volatility movement. I had spoken earlier about what I needed to see, excuse me, in the previous streams about what I needed to see to be taking a bigger setup for a long-term trade, and that would actually have to be a close above our previous distribution zone. So if we do see right here, we have an equilibrium candle right here, where an equilibrium candle is a candle that denotes a break in market structure. So we can see that we do have a very strong bearish movement right here, and then we put in a bullish candlestick. It's also a weak indecision spinning top doji. And then we break down further from that. We come back up for our first rally that we had talked about off the lows here at 3,600. We did rally up to 4,400 as I spoke about. And we just, all I've done is measured the true candle bodies of that equilibrium block and the true candle body of our spinning top doji at the top of our first rally to measure our distribution area, where there was a lot of selling pressure that the bulls were not able to overcome. Now, you can take the wicks on the daily chart into account, as I have, to form the 2 levels of the descending trend line to form a channel of where I'd like to short from. But when you're just looking at horizontal support and resistance, you can see that I have just used the level, the level of the equilibrium block and the previous rally candle, the spinning top doji of the rally candle, to form my distribution zone, to form my supply zone. So I am going to need to see a convincing close, a daily candle close above 4,288 before I am interested whatsoever in taking a long position. That would be forming a higher high as opposed to our second and our first rally. If we are able to do that, would also be a higher close, a higher daily candle close than our previous equilibrium block. So We're still not out of the woods yet at that point. We still have an area around 4,400 to contend with. I know that some people are being much more conservative and saying that they actually need to see a daily candle close above 4,400. But the way that I like to play it out with spacing position sizings out, the way that I would be willing to play this is a close above 4,200, 4,288, excuse me. I begin to speculatively enter into a long, perhaps about 10% of my position. I wait for the bounce up to 4,400, which is most likely the next likely area of resistance denoted by the previous point of control that we do see right here, and then a pullback to test that resistance as support. So a pullback to that $42.88, $4,300 range, perhaps even a wick lower. As long as we're closing daily candles above that level, if and when we make it above that level, then I will be confident on the pullback to enter into a more aggressive long position, looking at those upward targets at 5,500. So that is scenario one. That is the bullish scenario. Do I think that happens? No. So the play that I am going to be taking, that I am going to be fully fleshing out and posting to the members group here over the next few days, is to be spacing shorts in the area between 4,000 and 4,100. Managing risk at that 42.88 level. Again, the numbers are going to change slightly when we do come over here to the BitMEX chart, but just looking at spot price, that is the setup that I'm looking to take. And then again, we're looking to really retest all those supply areas, 3,600, 3,400, and 3,200. I think that we'll probably get a wick below 3,200 at that point in time, and then we'll probably get a weaker bounce off that level, perhaps back up to the point of control, depending on where the point of control is. If the point of control stays at 37.47, where it is right now on spot price, 37.34, depending on where you zoom the candles out, the more market data that you take in. I expect that if we do end up going below it, most likely the point of control moves down to around 3,500. That'll probably be our bounce. Very similar to what we saw back over here. If we actually go back and look at, our year of 2018. We'll go ahead and keep that 200 simple on there. Very similar to what we saw back here over the year of 2018. As you can see, every time we came back to test 6K, we got a reaction from it. Came back down to test 6K, got a weaker reaction from it. Came back down to test 6K, got a weaker reaction, and so on and so forth. Yep. And then the levy broke right here was your strong impetus to be going short. Of course, we did have a lot of other signals as well. As you can see, if we go back on the daily chart, we see the Fisher transform does cross below the zero line right here. As does our HD transformer as well, crosses below the zero line. Multiple signals to be going short. You did see that absolute spike in the shorts, or excuse me, absolute spike in sentiment in the shorts at that level, and the drop off of the longs also as well. Bearish divergence. You had just about every indication in the book to be going short on this last rally. And again, when you're just seeing lower highs, lower highs, lower highs, lower highs, lower highs all year long. You know, I know that there were a lot of chartists that were calling this a compound fulcrum. Again, I was even talking about the compound fulcrum pattern, but the reality is that when you're looking at chart patterns, you need to wait for confirmation of the break. And the reality is we never got any indication of a bullish break. I know that everybody was just super excited when we had this little bit of rally right here back in November when price actually reached a high of around 6,544 is the high of that candle. We did end up closing at around 6,500. Everybody was calling for 7, 8, 9K Bitcoin, and then that was just really the last opportunity to sell. Boom, before the reduction back down. All right, let's see here. Let me get to the chat. D7 Tom, good morning to you. Mr. Ether, gotta watch crypto. How are you doing, my good man? Thank you so much again for supporting the stream. Gabe Anderson, good morning to you, man. D7 Tom says, I need to make more coffee. I think it will be a week of stock pumps versus crypto dumps. Litecoin's volume looks better. Yeah, pretty interesting actually reaction from the stock markets. I think one of the things that I'm going to start doing for the stream is I have kind of strayed away from looking at traditional markets or Forex, but since that used to be my traditional wheelhouse, I've been focusing on cryptocurrency so much. If you guys would like me to look at a stock, if you guys would like me to look at a Forex asset, I'd be more than happy to do that as well. Hey, 12/22/2020 Dream. Hey, bro. Good. Happy New Year's, and may your wildest dreams come true. I won't be chatting a lot because I'm a bit overexhausted at the moment, but I'd love to watch the whole stream. Also, would you mind doing some baby TRX USDT analysis? Also, because I got some other people telling me TRX is about to blow past 4 cents, rallying to mid-January, late January. Love, bro. Hey, no problem, man. I will look at TRX USDT. And Nitin Soki asks, is the volume... Yeah, I'll look at Zao, man. Is the volume missing due to this being a mom and pop trade and not institutional investment? Well, yeah, I mean, there's a lot of ways. Let me think about that question for a little bit and how best I can answer that. So, is the volume missing due to this being a mom and pop trade and not institutional investment? So, what you're asking, is this being caused by is this rally being caused by retail traders being irrationally exuberant? Well, here's what I think. I think that there were some massive... If you go back in the stream earlier, I was talking about this almost 2 weeks ago. I was talking about the difficulty of Bitcoin being able to physically break the $3,000 level at that point in time. The reason why is because I was just looking at the limit orders across major exchanges. And again, you guys could have gone on. You guys can just backtest this. Go back and look at the stream. Go back and look at the historical data. There were just massive, huge limit orders spaced between 3,000 and 3,100. On the exchanges when we did come back down to this point in time. And those, they can't all be spoofing. They couldn't all be spoofing. It was too much. It was too massive. And they let their orders get chewed up. They really did. Edward Park, Happy New Year to you. Good morning, sir. They let their orders get chewed up. And because of that, we did get a strong reaction. Now, that was institutional order flow at work. And then we really have retail piling in, throughout most of this rally. But again, generally retail piles all in right here at these areas, and they're providing liquidity to institutional order flow to allow, for their short positions. Again, this is why I've charted out this channel. This is the channel that institutions would be looking at, and which is why I'm looking at it, for areas to aggressively enter into their shorts. They're waiting for retail to irrationally pump this up, not realizing that the rally has failed and that the trade on the table is actually to take this to the downside. But alas, just like we kind of see the exact similar thing down here. We don't really see the volume spike right here. We don't really see what we would normally see, where you generally see a massive increase in shorts at the bottom of a downtrend, and that is going to be retail piling in when they think the trend is done. We see quite the similar thing. Let's see here. It's not really a good example of it here. You get the better example with the irrational exuberance of the longs. Again, most individuals who are shorting in the marketplace at this point in time, or really who have been, are people who are better at it, I would say. Typically, your average cryptocurrency trader or investor is going to be uncomfortable with doing with shorting, and they tend to do it quite horribly. And most retail traders have an unbelievably bullish bias. So they feel uncomfortable shorting in the first place. They always enter too late. They take profits too early. They don't know how to let it run properly. So again, a lot of retail traders were looking to short at these levels right here, which we can look back in time and see was clearly the worst opportunity to short, whereas institutions and savvy traders were shorting from these levels right here, as we were. So, yeah, I think the reaction is not there because just the institutional interest in actually taking this to the long position is not there at this point in time. We don't see the long-term accumulation. I think that they're looking at the charts and seeing what I'm seeing, where they see that it is more likely for Bitcoin to go further down. So they will allow their orders to be spaced further down and pay less of a premium on their Bitcoin prices. Daniel, good morning to you, sir. Lifestyle Combat says, what exchange does Cracking execute Bitcoin trades on? We primarily trade on BitMEX, my friend. Also, can I post a link of a chart for you to check out to take into consideration? Yeah, absolutely, man. I'd love to look at it. Elias AJ says, can I check out Dash USDT? And D7 Tom says, Kirby loves shorting. Yes, he does. He loves other things from what I've been told. Again, I'm not super familiar with the guy. I've tried to watch a couple of his videos. I don't cast shade or aspersions on anybody out there in the space. Respect anybody doing TA or trying to do their own thing. But I just show up here every day and I do my thing, guys. Don't compare myself to anybody. Let's see here. Let me open up a thing here. So TRX USDT, Zao USD, and I'll take a quick look at Nano. and I will look at Dash USDT. And that's going to be it for the day, guys. All right, so I got the requests in. Also, do want to say that thank you so much to everybody that participated in the X42 giveaway yesterday. Mike 500 was generous enough to give us another 100 X42 to give away for you guys. We gave away 230 X42 over the last few days, and now we have another 100 to give away. So we only had 4 people actually get involved yesterday for the X42 giveaway. So on top of the brain fart, not enough coffee. Okay, so we still have 60 X42 to give away. So we'll extend that to today as well. Continue the giveaway for the New Year's. If you guys do want to post a comment after the stream is finished and leave your X42 wallet address, I will send the first 6 commenters out 10 X42. Happy New Year's to you guys. Jay Solomon asks, Justin, is it possible to incorporate into your show an aspect of Bitcoin versus traditional European and American markets with a live overlay chart? Interesting. So you're talking about something like the looking at the Bitcoin index versus something like the FTSE for European markets and the S&P 500 for the American markets. Be interesting to incorporate the Hong Kong and the Shanghai, or excuse me, the Shanghai index and also the Nikkei index as well. I'd like to do that, measuring the Asian markets as well. But yeah, the FTSE and the S&P 500, I think, would be interesting to do line graph analysis of them. It would have to be, again, I'm not the most tech savvy guy in the world, so I'd have to ask one of our developers to maybe craft that up, where I could get something like, if we go over here to, if we do go over here to the enlarged webcam scene of mine, you can actually see the significant trades ticker up there. And one of the things that I could probably do is incorporate something like that, but instead of significant trades, I could just make a little browser capture, and that would capture, perhaps just a line graph measuring volume as well. It's an interesting concept. Let me look into that with the dev and see what I can do, because I do like that idea. Alex Crypto TV says the only other YouTuber I like is Crown's Crypto Cave. Cool, man. Well, thank you. I'm happy that I am in that I'm in that category for you, man. A lot of people really don't know what they are talking about. Be careful. That is absolutely correct. Not trading at this time. D7 Tom says just learning and accumulating. That's absolutely fine, man. It is treacherous out there. Alex Crypto says, with a Head and Shoulders, how much slope is too much slope to invalidate the Head and Shoulders? Okay, well, according to Bulkowski, that's not who wrote literally the book on chart patterns. That's really not the right way to think of it, is that there's according to Bulkowski, like, crooked necklines are fine. But typically, in my experience with backtesting Bitcoin, we had, everybody was kind of calling. Let's go down to a lower time frame. Everybody was calling for an inverted Head and Shoulders over here too, honestly. It's just one of those things, man. So to answer the question of the sloping neckline, like how much slope is too much slope, it's not that there's not any level or degree of slope, I think, that would invalidate it, unless you're completely not looking at an inverted Head and Shoulders. Obviously, if your slope is insane, I think if you have a slope of like, if your slope looks like this, probably not going to be a Head and Shoulders pattern. So when we do talk about a Head and Shoulders pattern, let's just pull up the brush here real quick. When we do talk about a Head and Shoulders pattern, it's for me, mostly what I'm looking at is going to be, I'm looking for the volume characteristic. And typically what I want to see on an inverted Head and Shoulders is I want to see like decent volume on the left shoulder. Hold on. I want to see, let's see here. I want to see like decent volume on the left shoulder. I want to see huge volume on the head. and I want to see higher volume than the left shoulder on the right shoulder. I understand that looks like a whole bunch of grass and then like, you know, something like from the Da Vinci Code right there. But that is what I'm looking at, man. That's the most important thing to me. The slope of the neckline doesn't really concern me. However, what I have noticed is that in Bitcoin, when you do have a downward sloping neckline like we see here, so let's delete all that crap. Okay. So when we do see a descending neckline like we see here, that typically does not play out well for the inverted head and shoulders. You typically want to see an ascending neckline off the inverted head and shoulders, congruent with the volume pattern as well. Again, the sloping of the neckline is mildly important because I have noticed in backtesting Bitcoin and backtesting the chart patterns that the descending or negatively sloping necklines don't play out very well. You know, Bitcoin does like inverted head and shoulders. Again, head and shoulders and inverted head and shoulders and cup and handles are Western style chart patterns, whereas things like, you know, they were looking at head and shoulders. You know, Western style traders were looking at head and shoulder patterns with bar charts before candlesticks became really popular. And then with candlesticks, we learned about things like shooting star patterns and you know, haramis and you know, black cloud cover and, you know, 3 white knights, 3 black crows, etc. All these different chart patterns, hammers, dragonfly dojis, spinning tops, all these things that Western, or excuse me, the Eastern style candlestick patterns brought and made life much richer. There's actually a really interesting book in our resource library about the Encyclopedia of Candlestick Patterns, and it's got a really cool history of candlestick analysis and how it actually became incorporated into Western cultures, as opposed to, you know, how Western cultures were trading prior to, you know, really candlesticks becoming popular, which was mostly with bar graphs and bar charts. Point and figure, man, point and figure is an interesting one. Jay Solomon, you're awesome, sir. Echo 5127 with this low volume. What's Bitcoin going to do? Sorry. Well, I think that most likely the play that I'm taking right now is actually looking for a long play on XBT in the short term, looking to take that back up to a previous breakdown area, 4,000, 4,100, looking for a long-term directional short at that point in time. I did close out my short last night. Just kind of, you know, feeling that psychological reason. I think that we're probably going to come in Wednesday, get a little bit of a dump back down to retest the supply zone, and then a little bit of a rally back up here, just to be able to clear out liquidity, tap into liquidity, and let all the new traders for the new year enter into their short positions. Ganesh Chavan says, you are a fantastic teacher for technical analysis and providing it free. Great help. God bless and Happy New Year. Happy New Year to you too, my friend. Thank you so much. Alex Crypto TV, thank you so much for the answer. Much appreciated. I'm a software web developer by trade, but when I came across trading, I fell in love. You know, that was kind of my similarity. You know, I've been, yeah, TA is very satisfying to me too, man. And I am definitely what you would classically consider a nerd as well. Now I don't have a background in, well, like what you have in like software and web development. Over the years, I've tried my hand at designing websites. You know, I'm pretty good with computers. Obviously, you know, I'm 30, so I'm not like some of these young kids. I couldn't program to save my life, although I have, by hook and by crook, by necessity, I guess sheer necessity, learned a little bit over the years just so that I don't have to call tech support when I need something fixed. You know, I've worked on coding my own indicators in PineScript. Generally, I work closer with developers, though, to help me out with that stuff. Again, I've been manually trading for a decade, and so I just I tend to fall back on what my strength is. But I loved charting ever since I came across it, man. And again, this is what I do day in and day out. All right, let's see here, 1140. Okay. So we talked about the invalidation. We talked about how ugly this head and shoulders pattern is. Descending neckline. The volume characteristic is completely wrong. Can it still complete? Yes, of course it could complete. It's still a pattern on the chart, but I'm going to need to see the necklines actually get taken out. We have the conservative neckline over here. Let's actually go over here to the BitMEX chart. So we're looking at the BitMEX chart. We have the conservative neckline right here. We have the aggressive neckline over here. So we're just looking for our previous highs to be taken out. If we're able to take out that previous high at 4,200, okay, sounds good. If we're able to take out that previous high around 43, 4,400, even better. So again, like I said, if we are able to break above that $4,200 level, I'd be looking to, I'd be looking to tentatively enter into about maybe 10% of my regular position size, and then wait for the pullback, probably the initial rejection from that aggressive neckline around 43, 4,400, pull back to test 4,200 as support. If that does hold as support, then I'd be looking to enter into a longer positional trade to take those upside targets. Again, I have my conservative target at 4,665 and 5,181. You do actually have the measured movements pointing you up at 5,300. 5,364 and 5,615, but not really. I have those on the charts, but I'm not overly excited about them. Again, the play on the table for me is still to look at this distribution zone. Again, we have this descending trend line from the highs. We have this descending trend line from the candle body closes on the higher time frames that I have charted out here. And I'm going to be looking for this area to enter into my positional shorts. Nothing different over here as well. Same thing that we see on spot price as well. Hey, Xantimus Crypto, good morning to you, sir. Daniel, best TA team. Thank you so much, man. All right, I've got your X42 address. And I saw Nitin. Hey, Nitin, I saw you post your X42 address. All right, there we go. I got 2 X42 addresses, guys. I've got room for 4 more. Okay, so overall outlook on Bitcoin then, just to wrap it up again for the TLDR. Markets are closed today, low volume, not expecting a lot of volatility, looking for opportunities. Again, we had taken that short on the breakdown from our previous distribution. Let's go over to the BitMEX chart so you guys can see like actually what I look for when I trade. So over here on spot price, actually, let's go to the 4-hour chart. Let's go to the 4-hour chart. So we did have this rejection from a previous supply zone, okay? We had this rejection from a previous supply zone on a failed rally. That was my first initial instinct to enter into a short. I got the crossover on my HD transformer right here, confirmed kill, especially after a rejection from a distribution area. Same thing here. I got the crossover also on our time transformer on the Fisher transform, also crossing below the 0 line as well. Again, two confluent areas. Again, looking at horizontal support and resistance as my primary indication there. Let's pull up the VPVR as well. So, rejection from the supply zone, crossover on my oscillators right here. And then once we actually broke down below the point of control right here, we closed below the point of control. That is also congruent with the Fisher crossing below the 0 line and our HD transformer crossing below the 0 line as well. That was confirmation for me to enter into more of a short. We did take that. We're able to ride that pretty much all the way down. Let's get rid of that moving average. Pretty much rode that all the way down. I did end up closing that out last night right around here. Now looking for a longer term, excuse me, not really a longer term, but we're still underneath the point of control. So the technicals are still a little bit bearish, honestly. But I do expect that this supply zone right here holds up on the secondary pass through. I do see that the Fisher transform is actually down to -2 standard deviations. That's pretty oversold now. When we're trending strongly, again, overbought, oversold doesn't matter. But when you're looking at an oscillator of choice, looking at the Fisher transform, it does count the wave cycle very well. We do have a little bit of confluence between our recent low. We are putting in a higher low here on the lower time frames as well. And we have our oscillator confirming that as well, looking at the Fisher transform. We also have that. We also have our HD transformer crossing above the 0 line and giving us the buy signal right there with the cross up. So all of this is kind of confluent. We don't really have the strong buy signal yet from the Fisher transform. The only thing that it's telling us is that we are extremely oversold, down at -2 standard deviations away. So, and we're also below the point of control. So at the very least, I would expect the cross up here. Again, we might drift down a little bit lower. We could get a little bit more oversold here, honestly. But we'd still, as long as we're putting in a higher low, I would expect us to, as we already did. Again, when we put in that long, I put in that long right about here. or no, it was actually right here, excuse me, when I did end up closing out that short and switching for the long. Again, they're not fully filled. I know the traders in the members group didn't get fully filled, but the first target was the point of control, looking for a return to the point of control. We didn't get a strong movement back up there, but we did go up there. We did go up there. We did hit our first take profit target. So, but again, they would have only been filled with about maybe like 10% of their position, depending on how they decided to play it out. So as long as we're putting in a higher low here, I will be still at this point in time looking for that return back up here. Ideally, it's cool if we don't make it back up there. I'll just wait for the charts to confirm the technicals to re-enter into a short position, which is overall the safer position. But I kind of do want to keep busy during the nears, so I'm going to be looking to take this long trade back up into my optimum area to short from, and that's where I'm going to have much larger orders set up to take the market down. Let's see here. Andrew Lovelace. I'm a computer scientist also. I love technical analysis. Just started early 2018. I've learned so much from people like you who are willing to share their knowledge and insights. Thank you, man. Thank you so much, man. Thank you for sticking around and supporting the stream. Hamze, I'm not going to do last names that I can't pronounce. I'm sorry, man. But Hamze, Happy New Year to you, man. Hey, when I start with the TRX analysis, can I put in a screenshot? Yeah, no problem, man. You can link me to your TradingView chart or whatever chart you want, and I'll take a gander at it. All right, so looking for the long play, at least back up. If we close above the point of control, I'd probably be looking to add more to my position at that point in time. We do have that previous distribution area to contend with, coming in right around that mid to high 3,800, almost to the $3,900 level. Again, I would be looking for that $4,000, $4,100 area to be looking to enter into longer term positional shorts from. All right. Fairly simple, fairly simple. Same thing over here on BitMEX. Just move the one, guys. Just round up. Okay, so let's go ahead and that's 1148. So I'll tell you what I'm going to do. When I come back, I'm going to go ahead and take an earlier break today. When I come back, I'm going to look at, let me pull up my thing, TRX USDT. I'm going to look at gold. I'm going to look at Nano, and I'm going to look at Dash, all to USDT. Hey, Omega 180,984. Hey, man. Neues Jahr. Haben Sie ein schönstes neues Jahr, my friend. You only lose money when you sell. HODL, I don't think that that's the best investment strategy, man. Don't think that that's the best investment strategy, honestly. Again, hodling has not been working out very well for 2018. Hodling is just a very poor strategy in a bear market. The better strategy is to look for oversold opportunities. Well, really, honestly, okay, this is how you safely play a bear market. You don't hold the underlying asset, and you look to trade on leverage platforms. You look to open up strong directional shorts that you add to as price moves in your direction. And what movements are you looking for to add to those positions? You're looking for rallies. You're looking for rallies, and you're looking to short those rallies. So you're looking for when price becomes relatively overbought on lower time frames, and that's when you're looking to add to your short position. You just continue adding to your short position on the way down, looking to cover at key levels that you've predetermined. But typically, it is very treacherous to enter into long-term positional longs in a bear market. Dankeschön, mein Freund. Again, I have some people on the stream that are trying to keep me touched up with my German. I used to be much better at German, but the last 10 years I have not used it that much. Again, my grandparents spoke it when I was a child, and I do, I know the phrases and everything. I speak to my kids a little bit, but still rusty as I'll get out when it comes to conversational German, because I don't have anybody to speak conversationally with. I talked about this earlier on the stream. I used to have some friends and pen pals that I would voice chat with and write in Germany, and that was keeping me sharp throughout my teens. I need to start doing that again because I love that language, man. All right, man. I'm going to take a quick 1 to 2 minute break, guys. And when I get back, I'm going to look at the requests. I'm going to go over some announcements for Kraken Cryptocurrency for the new year, talking about the premium members group. Again, I kind of woke up late today, kind of getting late to the charts. Again, nothing's really changed. So again, I just have my areas of interest on the charts, and I play based off, the play that we get between those levels. But I did post out about 3 or 4 signals last night for them. So They should be doing well, but they're probably yelling at me right now because I'm doing the live stream instead of posting new signals up. So I am sorry, guys. Just running a little bit late. Again, up late last night celebrating the New Year. So I'm going to take a 1 to 2 minute break, and I'll be right back, guys. And we'll talk about all this fun, exciting, wonderful stuff. Don't go anywhere. And we're back, guys. Sorry I was gone so long. Thank you so much for hanging in there with me. All right, guys, let's get to the requests. All right, let's see here. Jay Constant says, my antivirus says X42 is a virus. Yeah, my antivirus scanner says Bitcoin Core is a virus as well. Again, I don't run X42. I just like the guys for the team. I think it's a good project. If you guys, again, I never push you guys to install or buy anything. I'm just saying, if you guys have an X42 wallet, I will happily give you guys X42. I have X42 installed on my computer. Never had any problems with it. They've got a good support team over there, guys. If you guys have any questions, you can hop in their Discord. All right. So, okay, let's get into the requests. Number one request is TRX USDT. All right. Well, revealing some internal secrets there. Scott says, should we go over crypto trading New Year's resolutions? I plan to not hodl anything going below 30% in my portfolio. All right, so here's the skinny on TRX USDT. We actually took this trade last night. You can see the metrics of the trade. Again, I saw that the time transformer was 2 standard deviations oversold. Did get that initial cross up right here. The actual HD transformer gave me the earlier entry signal on this candle right here by crossing above the 0 line. So took that trade, managing risk right below the low of these candles. Looking at 3 initial take profit targets, basically looking for a return to the point of control trade here on Tether. That did actualize. We did already hit our first take profit target on USDT, or excuse me, on TRX USDT. So let's just get rid of, here's what I need to do actually. Like that. I can delete take profit target 1, and I'm looking for take profit target 2 and 3. All right, so taking a gander here. Okay, we do see that the Fisher, excuse me, we do see that our time transformer, the Fisher transform, is still curling up. Getting a potential on the 4-hour chart, getting a potential crossover right here at about -1 standard deviations away. We'll wait to see if this does end up positing in a higher low than our previous local low right here. Again, I am managing risk right at that 0.01842 level right here. Did have a previous support area here as well at 0.1817, an area of interest, managing risk here. Dropping down below that, we have a couple other areas of interest as well. Obviously, the low of this candle, which has acted as support once. So one way that you could potentially look at this is as an inverted head and shoulders. Again, the volume characteristic on this is not quite appropriate either for an inverted head and shoulders. Again, it's better because we have decent volume on the left shoulder. We have higher volume on the head as well, but not quite as high as the left shoulder. So the volume profile is not there as well. However, the pattern is there. The pattern is congruent. If we are actually able to close the point of control, I become much more positive about that potential pattern playing out. But that would be looking for a play, taking a measured move. That would be looking for a 13% play, looking for the breakout zone right here of the neckline. That would be putting us back close up here to our previous area of resistance, honestly, right here at the 4-hour highs, at the local 4-hour highs. But I'm going to need to see that play out. So when do I become more confident about that longer term play on TRX USDT? Again, the trade that I took might degenerate into a scalp trade. Again, obviously our members entered here. And the way that our strategy works is that once we hit take profit target 1, we do look to trail our stops to entry or in profit. So they might actually be out of the trade depending on where they did enter. Of course, our stop loss is down here for just the traditional setup of the trade. So if we are able to start closing 4-hour candles above that point of control, currently coming in around 0.01953. Again, I do have a secondary take profit target at 0.01970. I do think that is what is likely to happen. I think that we will see a thrust up to that point of control. Again, does it happen today? Again, we have a low volume day. The markets are closed, blah, blah, blah. No, but I do think it does eventually end up happening. Also, I do have our secondary take profit target at previous resistance at the local resistance here at 0.02063. Now, if we are actually able to hit that take profit target 3 and close above these levels of resistance, which is also going to be acting as the neckline, if we actually get a 4-hour candle close above those levels, then the potential for that longer directional trade up here to 0.02296, almost 0.02, well, let's see, 0.023 is almost on the table as well. We just call that 0.023, honestly. I like round numbers. Yeah, 0.023. So slightly above your high closes on the 4-hour candle chart. Okay. So TRX not looking too bad. Again, let's look overall. Let's just look at this thing. In base metrics, we are trading below the point of control. The Fisher transform is in the negative aspect of its wave cycle. We do have the ability to top below 0. We do have our HD transformer above the 0 line, but this is our momentum oscillator. This is our wave measurement tool. So the technicals are bearish right now. So I am looking at the chart pattern and horizontal support and resistance for the bullish bias on this trade as well. However, as always, managing risk tightly on altcoin trades as well, because I'm doing the majority of my capital trading on BitMEX as well. We did also take this trade on TRX H19 to the upside. Did hit our first take profit target there. If we actually go over and look at that, TRX H19. There you go. You guys can see the trade setup. Did hit the initial take profit target 1. The second take profit was a return to the point of control trade as well, and managing risk down here. We are now returning to the entry zone as well. So 2 opportunities on the table, either a re-entry or a stop loss with profit taken, and then a break-even trade right here, depending on how the individuals are looking to trade it. We do actually see here that our HD transformer on the 4-hour chart for TRX H19 is giving us the extremely overbought signal on our HD transformer. However, our time transformer, our wave cycle measurement, is crossing above the 0 line right here. So kind of wait to see what happens at this point in time. I still feel fairly confident about this trade. Is it possible that we just put in a higher low, or excuse me, a lower high, and we continue downwards? Yes, possible. But we do need to take out these support levels as well. If the stop loss on this trade does get triggered again, depending on how the individuals are playing it, they're either in profit or stopped out now, or close to being stopped out, depending upon their entry signal, because the entry was around here. So if we are actually able to take out this support level right here, which is right where I have the stop loss for the trade, that would be a good signal to be entering into a short. That would most likely be congruent with, again, the HD transformer being extremely overbought, and also the Fisher transform or a wave cycle measurement topping below the zero line, which is a bullish signal. So kind of got to wait for confirmation on the direction of this trade. Going back to TRX USDT. Going back to TRX USDT. Again, so would I enter into a trade right now at this point in time? No, probably not. Again, kind of want to wait to see if we do end up holding the support line right here. If we do get a little bit more bullish volume, more than likely, I think that does happen, and we do end up getting that movement up here back to retest that point of control, 0.01956. The real play on the table, the real bullish play, honestly, on the table is to wait for that confirmed close above 0.0232, right here where the neckline is. If you wanted to be more conservative, you could actually look to take out the highs in that previous point of control at 0.02063, and then you do have that measured move trade on the table here, about a 13% gain. So I'd actually measure that from here, as I said here, that 13% gain up to 0.023. So that's the trade on the table. How do you actually take that trade? Well, you wait, depending on what metric you're using. Are you waiting for the close above? Are you waiting for the close above the close of your high? Are you waiting for the close? Or excuse me. Are you waiting for a 4-hour candle to close above the actual close of your previous resistance? Or are you waiting for your highs to be taken out? So depending on how you're looking at that, you actually have 3 different areas of interest. 2 are pretty much identical. So you have, if we zoom in here, you have the high of this candle, which is forming your left shoulder. You have the high of this candle right here, which is forming your right shoulder. You have the close, excuse me. And those are pretty much identical, coming in at 0.02042 and 0.02035. So you could just split the baby and call it the middle, although I prefer to be more conservative and just use the left measurement as my metric. So you close a 4-hour candle above that, you are looking to take that bullish entry, and then you're generally setting your stop loss at the low of the candle that actually violates this line. That way, you know, if you're wrong, you're able to cut your losses quite small. And if you're right, you're letting your winner run. If you wanted to be more conservative, you could actually wait for the highs to be taken out. So that would be 0.02063, exact same metric. You're looking to set your stop loss below the low of the candle that actually violates that line. And then you're looking for your take profit target up here at 0.023. And then again, if we do end up taking out this low and closing below 0.01842, then you're most likely looking to enter into a short trade, because now you have taken out your recent low, and that is going to be more congruent with our with what our oscillators are telling us here. That the Fisher is in the negative cycle of its aspect. We are potentially going to top below the zero line right here. So kind of just want to, although we did enter into that trade last night, it's already been profitable for us. We already hit take profit target 1. If the members are following the strategies, they're either out with their stops trailed in profit, or if they wanted to be more risky, they are still in the trade, potentially looking to re-enter and looking at managing their risk right here. So the risk to reward is still on the table, basically just back at that re-entry level right now. If I were to call the trade right now, it would be a no trade zone for me, and I would actually want to wait, because we didn't get as strong a reaction off this bounce than I expected. I would actually want to wait for a close above the point of control, or for our Fisher to actually cross above the zero line, to be looking for that play up to our conservative resistance level right now at that point of control. And then again, the secondary bullish trade is also on the table on a close above that level as well, up to 0.023. So a lot of potential trades here for TRX USDT. Again, I hope that's not overly complicated. Let me scroll up. 12/22/2020 Dream. Let me look at your charts now, my friend. J Constant. All right, my friend, I have your X42 address. I will add that to my notepad. I think I saw another one up there. DMD, I watch this every day. Hey, thanks, man. Thank you so much for the support. Draco says, this is my technical analysis. I just took a long position in Bitcoin for the bump, so I can guarantee the price will go down by $200 to $500 in about 15 minutes. Hold on a sec. Jay Constant, I want to make sure that yeah, I got your address, man. Michael Fariello, thoughts on Cardano? I kind of detest Cardano, but it might be a good trade. All right, so I do have room for 2 more X42 wallets, guys, for more giveaways. So if you guys are X42 holders or have an X42 wallet address, I do have space for 2 more. You can either leave your wallet address in the chat or leave it in the comment section after the video. All right, now let me look at your charts there, my friend. A trading opportunity to buy in TRX USD. Ooh, man, you got a really bullish optimism right here. All right, let's see what we got going on here. This is a sample forecast, 12/27/2018, forecast beginning of uptrend, current range bound. Yes, you obviously do see that range bound. Buy above 0.015690 with price action, and you are forecasting a return to the 382. Okay. I like your analysis here. This is much more professional than most of the stuff that I see. I'm assuming this is RSI. Major resistance, major support, minor resistance, divergence. Let's look at your technical analysis. Tron dollar is in a range bound and the beginning of uptrend is expected. The price is above the 21-day weighted exponential moving average, which acts as a dynamic support. The RSI is at 66. All right, so RSI is positive. Above your 21, you know, I like that you're using weighted exponential moving averages. I tend to traditionally use classical exponential moving averages when I do look at exponential moving averages, but that's absolutely fine. The 21 is a strong call. Again, 21 and 55 are the things that I look the most. 13 and 55 if you're looking to take shorter term positions. Signal to enter the market occurs when the price comes to the buy zone, then forms one of the reversal patterns, whether bullish engulfing, hammer, or valley. In other words, no entry signal when the price comes to the zone, but after any of the reversal patterns is formed in the zone. Nice. Well, I'll give you my initial thoughts. I think that your technical analysis is absolutely fine. You were looking for that daily close above the 21 weighted exponential moving average. So now you're looking for a pullback to retest that level as support before a continued upwards movement. Now, here's what I will say. I am speculative and tentative. Let's look at Tron on the daily chart. So here's what I see on the daily chart. Closing below the point of control, local point of control. You do have your time transformer coming back down from extremely overbought territory right here at 2 standard deviations away from the zero line. You have to wait for price action to tell you really what's going to happen here. You do have to wait for that bottom above the zero line. If that does happen, that's a bullish signal. I have my HD transformer crossing below the zero line as well and giving us the crossover right here on the daily chart as well. So you have this HVN area to overcome. So typically the way that I'm looking for extremely bullish plays like this, well, first off, I'm really not looking for extremely bullish plays like this. I'm very speculative and conservative and tentative about massive rallies in altcoins or in cryptocurrencies in general at this point in time. Why? Because we've had this really nice rally in pretty much all the major alts as well. Unfortunately, the problem is that we really haven't been able to overcome significant resistance. Now, it does look good. We are giving it the good old college try. And if we do start taking out these previous distribution and resistance zones, then I can start looking at more optimistic bullish targets. Just like when I'm looking over here at Bitcoin, I'm like, yeah, guys, this looks good. We had a nice little rally, but all we did was put in lower highs. We still have these distribution areas to take out. We do need to actually close above previous resistance before I actually get excited about taking a long trade and that the bear market is over. I think that, let's see here. Again, I don't want to be overly negative, but I think that you have some good technical analysis, and I just want to make sure that the only thing that I don't see on your chart is where you're managing risk. Again, the best trade can be taken out with poor risk management strategy as well. So, I like your TA though. I'm curious, where are you measuring? Let me make sure I'm keeping up in the chat. I'll copy this one as well. Maybe your question will be answered if I look at your secondary chart. Okay, now you're looking at your other ones as well. You have the falling wedge on the RSI, bullish pennant, okay, I do like here how you point out that conservative traders should buy TRX after a confirmed breakout and place their stop loss under the support trend line. A classical way to take the trade. Excellent, man. This is not the classical way that I trade. I don't really look at chart patterns in the MACD or the RSI. I know a lot of people do, so I do want to say actually congratulations, because you've done some good technical analysis here. This seems well thought out and fully versed. Again, I'm kind of with you too. If Bitcoin does give us those nice bullish signs, I think that the market will follow it. Same with TRX. You can understand where the general market is going by looking at different sectors, like when you're looking at traditional equities and stocks. Same thing with you when you're looking at cryptocurrencies. You can kind of get a feel for what the entire market is going to do based on what any individual chart is going to do, especially when you're looking at your larger blue chip alts like Tron or Ethereum or Ripple. So yeah, if we're actually able to close above, especially above this previous distribution area right here, I see that you actually do have us moving all the way up to like 0.06. 65%, oh, excuse me, that's more. That's a 200% gain. I think that's definitely something that we can see if we do start a bullish rally. However, I do want to get some kind of confirmation by taking out these previous resistance levels right here. What I do see here, the most likely thing is also a potential cup and handle pattern. We didn't quite pull up all the way with the close to form it as I would like to, unless you're using this metric. Looking at a Fibonacci retracement. Now I just feel like I'm looking for stuff to talk about. Right here where the buying began. And here where the buying ended. Yeah, we do basically see that price pulling back between that 236 and the 382, which is your traditional entry for cup and handle pattern as well. Generally managing your risk below that 50% Fibonacci retracement is typically the way you do that. Thank you so much, Windows, for all the alerts that you're giving me. Oh, Michael Fariello, sorry. Why do I detest Cardano? It's my first time on the chat. Well, thank you so much and welcome to the stream, my friend. Because I don't think it has a strong use case. I think it's been marketed to individuals who don't fundamentally understand who don't understand the fundamentals behind Cardano. It doesn't really have a lot of adoption. I know that everybody's saying that Cardano is a wonderful, like amazing investment opportunity. I don't think that it is. I think that Cardano is going to face the same problems that a lot of these other altcoins are going to face. Could it be a good trade? Like, yes, absolutely. I'm willing to basically trade everything. When it comes to trading, I'm coin agnostic. But when it comes to like fundamental research, like I don't see the value in Cardano as opposed to anything else. Again, I kind of went over this at length yesterday. Basically, it falls right into the level of Ethereum with me. Let's see here. 1222-2020 Dream says, to be clear, this is not my technical analysis. I'm not that good. I just draw lines, volume, and some RSI, just to be clear. Also, the second link, yeah, it also got me thinking. He says, basically what you said to me like half a week ago to buy it again at 15.18, and then boom, bada pow, boom, burst up from 4th of January to 4 cents and maybe higher. Minus that last part, which you didn't say as being, of course, conservative, which you should. Watch the second link, and also I manage my risk real time by looking at charts and then myself and use stop losses. I guess crypto hype can do a lot, man. Well, let's see here. Yeah, so I do agree with Mr. Ether. I do agree with you. I think that if Bitcoin does not get a spike, I think that if Bitcoin does not take out previous resistances and continues to drift down toward 3K, then most likely, even a spike back up to the $4,000, $4,100 level would not really do it for me. Again, that would all that would be doing is forming still lower highs and still be looking for that as an opportunity to enter into directional shorts. So yeah, TRX is going to need to see the momentum of Bitcoin actually pull up. We haven't really seen the decoupling of the alts yet, especially at this nature of the season. Or excuse me, at this level of the bear market, haven't seen the decoupling. Yes, it does look like a promising trade on the table. However, I do want to be very, very speculative. And one thing, here's one thing that I will posit for you guys. That and again, I don't like casting shade or aspersions. Again, what I want to see though is when people are talking to me about trading and their technical analysis. Like, technical analysis is fine, but as a trader, there's a difference between an analyst and a trader. And as somebody who does this for a living, I want to see your equity curve. I want to see if you're being profitable in your trading. You know, your analysis can be fantastic, but you can be a terrible trader in practice. And your best analysis can be taken out. That's why risk management and discipline are far more important than analysis, honestly. I know good traders who have good risk management and discipline to their strategy, and they're only right 30% of the time and they make money. Direction matters much less than people think. People put a lot of stock in analysis. People should be putting a lot of stock in risk management and discipline to a trading strategy, because as long as you stick to a trading strategy that is profitable over time statistically, even a 50-50, even a 40%, even a 30%, depending on the particular strategy, can be profitable actually. Direction doesn't matter. I think that was the most important lesson, one of the most important lessons that I learned after my first, like, I'd say 18 months of trading. When I made every mistake in the book, and I'm pretty sure invented some new ones. It still took another 12 to 18 months after that until I was actually able to become consistently profitable. And that's because I stopped worrying so much about direction and focused like a laser on risk management and discipline to my strategy. Shit, I'm all out of coffee. All right, let's see here. But yeah, so just looking at this on the daily, your key area of interest here is 0.01980, which is also going to be congruent. Again, we went down to that 4-hour chart and we were talking about taking out your previous highs as well. That would be a trade above the point of control. Let's zoom in here a little bit and we can actually see. Yep. So right around that same level. We look at the 4-hour time frame, we can actually see that's coming in right around 0.01956, so about the same level. But you could be ultra conservative and wait for this previous point of control to get taken out, also the point of control on the daily chart. Zoom out, get all this data in. Yep. That previous point of control is coming in right around 0.02246. If we looked at that actual close on the 4-hour chart, that was 0.023. So taking out that is actually going to be a pretty good bullish signal. You're not out of the woods yet because you do have this entire distribution area to get over with as well. And then getting above that, you enter into an LVN zone. So yes, that is a good gap trade right there. Breaking above that value area, right above that, starting really right around like 0.02628. Generally, those don't happen on the first pass through. Generally, you get wicked down when you are looking at a breakout. They don't usually break on the first go through, but the second or the third pass, they break out. Then you've got a fantastic trade up here to that previous point of control. You got a 34% trade on the table there. So I'm very speculative about those long plays because I saw so many of those. Like I saw so much analysis like that back in 2018, 2017. And that stuff works out in a parabolic market cycle when you're forecasting like 200% rises. Works out in a parabolic market cycle. But in practice, I find that those traders, and again, this is not to cast aspersions on an individual. I could be completely wrong. But I find that focusing, kind of just taking everything with a grain of salt and looking at the actual market cycle that you're in and trading what's in front of you is a far more consistent strategy. All right, let's see here, brother. I feel like I'm always a Debbie Downer, man. I'm not always like this, guys, but I am a cheerful pessimist, I'm kind of pessimistic by nature, but I just have a very cheerful personality. So I have a cheerful, I have a cheerful personality, but a pessimistic mindset. So kind of a bear in that sense. So bears make money, bulls make money, pigs get eaten, man. So don't, take what I say with a grain of salt, man. Do your own research. I don't want to, steer you away from making a trade or an investment decision. That's, ultimately that comes down to you. I can only say what I see on the charts, and I'm still not over my pessimistic, bearish mindset. Tyler Heel says, good new day of the year, fella. Hey, good morning to you, man. Hey, the spam's all good, man. K7 Jixer says, Bitcoin has had 3 major pullbacks since 2013. The first was 82%, the last was 87%, and the current pullback is 84%. Darn right, man. Jay Constant says, let's all sell and buy Bitcoin all at once around 2K. That'll move the markets upwards. Hey, the problem with that is that you can never be sure where the price is going to go. That's why I play the chart in front of me, guys. Mbate22 says, Twitch is for the intellectuals. That's right, my friend. Good morning to you, Mbate. How you doing, man? Happy New Year's to you, my friend. Mobius378, glad you could join us this morning, man. Thank you so much. Michael Fariello says, what gets me is that the future of alts depend on Bitcoin. It's like market manipulation controls the space. Do I agree? No, not at all, man. Not at all. Not at all. The reason that the future of altcoins depend upon Bitcoin is because what everybody really cares about is Bitcoin. Like altcoins are just like window dressing. A lot of these altcoins don't have strong use cases, have very shoddy investment ideas, very shoddy technology that is not market ready. They're more like speculatively investing in a startup, whereas Bitcoin is worked from day one, with very few exceptions, with very little downtime. Again, Bitcoin does what it claims to do. Bitcoin does what it claims to do. These altcoins don't do what they claim to do. Their technology is unstable, just like Ethereum's technology is unstable. That's why I don't like Ethereum, because it's kind of like, here's how the development process works in Bitcoin. Things are worked on for like years before they're actually implemented into mainnet. They have multiple test nets, multiple dev nets. I'm not talking about Litecoin. I'm talking about actual test nets for Bitcoin features. And you have some of the best developers in the world who have been working on Bitcoin since like 2012, 2013, 2011, some of them. And they are highly competent, highly intelligent people who have been steering the Bitcoin protocol correctly for 10 years now. And it does what it claims to do. Bitcoin works. It works out of the box. It's fine. Bitcoin network, the Bitcoin blockchain has never been hacked, never been compromised. And And you have these other altcoins that suffer from potential 51% attacks, from centralization, from central points of failure, from proof of stake, from all these things that are not wild tested, man. They're speculative technologies. Bitcoin, it only purports to be sound money. That's not speculative technology. I mean, the technology is, of course, by its nature speculative because it's new and emerging, but it continues to get better every day. Whereas what kind of development do we see from a lot of altcoins? Like, you know, what kind of project do you run when an Ask Me Anything announcement is expected as a news cycle to pump the price? For real, guys. You just got to look at the reality of the situation. Let's see here. Hey, thank you so much, Drool216. Thank you so much for the follow on Twitch, my friend. Welcome to the community. Let's see here. 1222 says, I would definitely agree with that for now. Later in the years, we will see TRX rise, even if Bitcoin stays low. Just think back off the 1 cent Ripple, and I'm pretty confident that TRX will overtake XRP. Whoa, man. Hey, calm down. You're going to get the XRP army enraged, man. But I actually do think that Tron does have some legs left in it. We just have to wait for the bear cycle to get over, man. And then I'll look to open up long-term longs on most of our blue chip alts. But midterm, like 5 to 10 years, I don't think a lot of this stuff will be around. Michael says, the only traders making money in cryptocurrency are the ones who can short. I'm not able to short where I live. It's called a VPN. Moving on. Keel Wilson says, I think that the Bitcoin chart is the most important. Even though I am long-term bullish on some altcoins, everything still gets dragged around by BTC. Exactly. That's why you should start off your day, if you're going to be doing some trading, by looking at the Bitcoin chart. And also, I think that, Doc brings up some good issues, that if you are just concerned, if you're concerned with accumulating BTC, trade Bitcoin pairs. That's absolutely fine. If you're shorting Bitcoin or looking to sell Bitcoin and buying lower and shorting it in that aspect, I guess, then you can look to hedge by accumulating more Bitcoin by trading altcoins to Bitcoin pairings, because you're just looking at that as hedging the market. And I would recommend you only use like 10 to 15% of your trading portfolio to do that with, to trading altcoins to Bitcoin pairings. If you want to be if you're just concerned with stacking your fiat value, then you probably should be trading to USD or USDT pairings. Just the wrong market cycle for it. Let's see here. Mbate says, didn't the XLM guy just call Tron garbage? Even more of a reason to go in on XLM. Papa Hickson, hey, thanks so much for the follow on Twitch, man. Good morning to you and welcome to the community. Andrew Lovelace, I have your X42 address, my friend. Gonna have 10 X42 coming your way right after the show. $12.22 says, also just a personal thing, but the money I put in, I can lose. I would cry if I was to lose it all, of course, but I can lose it. Nonetheless, I also agree with the term, there comes another trade to take. Yes, there will always be another trade to take. That's why I don't get ultimately super married to my positions or my entries or my exits. They're ultimately not important as important as my risk management and the discipline of my strategy. There will always be another trade to take. I'll be doing this in 5, 10, 20 years. Red Fife Golf Gunny says crypto is dead. Thank you so much, sir, for that reality check. Yes, reality is a downer. Hey, Daniel De Leon, thank you so much, man. Thanks for joining us this morning. Gage Ashbow says, hello, could you please explain the nuances of the indicators you use? Thanks in advance. Hey, no problem, man. So, in its most simplest term, I have webinars that cover the nuances of these fully, but here's I'll give you the TLDR. So, here's what I look at when I trade. I look at the overall trend of the market, and you can determine that in multiple ways. The traditional way to look at the overall trend of the market, very simple. You can throw on exponential moving averages, simple moving averages, and look if they're curling up or curling down, or whether or not price is beneath or below them. Okay, determining trend. Again, I don't have to do that. I can generally just look at a chart and tell you if the market's bearish or bullish on the macro time frame. It's pretty easy to see. Like, obviously, we're in a bear market. So The top indicator that I'm using is my HD transformer. That is, again, I'm a fan of John Eller's technical indicators. So John Ellers was an electrical engineer that ended up getting into trading, and he wrote lots of wave cycle indicators that transform price and price action and different measurements into wave cycles. So the top indicator that I'm using uses what's called a Hamilton discriminator. So it is an equation written by John Ellers that automatically predicts and figures out what the wave cycle of the market that you're looking at. It then applies that wave cycle to RSI, and then what it does is uses the Fisher transform algorithm to transform that into a bell curve. And that is able to filter out as an oscillator. That's my momentum oscillator. It's able to filter out a lot of the noise that you're going to get from something like the RSI or stochastic. That sounds like a lot, but it's really not. You're just using extremely complicated electrical engineering algorithms to transform price action into a wave cycle. I use that as my momentum oscillator. I find that it gives me much earlier and much more poignant entries and exits than what I use the bottom indicator for, which is your traditional Fisher transform of raw price action. So that is transforming price action into a bell curve, whereas my top indicator is transforming RSI into a bell curve after that RSI has already used the Hamilton discriminator equation to automatically predict what the wave cycle is, or excuse me, what the look back length should be. So I use the bottom indicator for divergence, and to give me overall directional trend, I use the top indicator for entries and exits. Again, overbought and oversold levels as well. And then I use the volume profile and horizontal support and resistance to look at key turning points in the market. Again, basic supply and demand zone trading forms the crux of my trading, looking at key supply zones, looking at key demand zones, the likelihood of price to retest them. And then my risk management is traditional horizontal and support risk management as well. Hey, thank you, 122020 Dream. Thank you so much, my friend. K7 Jixer 1000 says altcoins used to depend on Bitcoin because it was the only pairing. Now most alts have multiple pairings, so Bitcoin is not as important. I do agree with you. I think that is a good point. However, if you look at the bulk of the market cap, it's in Bitcoin. Most of the interest is in Bitcoin. When Bitcoin does enter into another bull cycle, the same institutional interest will be there for the altcoins as well. So in that facet, Bitcoin still runs the market. Michael, you're welcome, my friend. Lifestyle Combat says, man, that's some hard scrutiny on the altcoins, but that's the type of criticism we need. Thanks, man. You know, I guess the way you have to understand that from a fundamental aspect, like I am a trader, so I am coin agnostic when it comes to what will make me money. I don't really care. But if we set trading aside and we just talk fundamentals for a second, the reason that I got involved in cryptocurrency, you guys have to realize I've been doing this for a decade, and I'm 30 and I'll be 31 here in March, and I'm looking for opportunities to, I've sown my wild oats, and I've traded for a decade, and I'm looking for opportunities to be invested now in something for the long term that also I think can fundamentally change the world. I believe, I'm an anarcho-capitalist by nature, philosophically bent. I have a libertarian bent. I do want the world to be freer. I want the world to be freed from the grip of debt and, global governance. I want individuals to be empowered and free. And that's not all just pipe dream stuff. I do think that as technology improves, as human society moves forward, we do get closer and closer and closer to emancipation from things that hold us down. Old social structures, old religions, old styles of government, monetary policy, banking policy. And right now the world is in the grip of, the global governance of debt and crisis. And it's not a good thing. It's not a good thing. I have, just personally, I have watched the middle class just be absolutely gutted over the last decade. And it's been going on for much longer than that. Again, I am relatively a young man, but I've been watching that go on and on and on and on and on. And I've seen real people suffer from the largesse of government. Now, again, don't take that the wrong way. I am not a socialist or a communist by any means. I do not think that the answer is forced redistribution of wealth. I do believe in hierarchy, and I believe in meritocracy. I think that most of the successful, I think that most of the successful businesses out there are successful because they deserve to be successful. And I think that overall, most individuals who are long-term poor are poor because they suck with money. However, I do agree that the system does need improvements so that individuals can have more empowerment and ability to go out and accrue wealth for themselves. I don't have any problem with corporations or anything like that. What I have a problem with is when you have government collusion with corporations, because a corporation, a company, can't force you to do anything, but the government can. The government can point a gun at you and force you to do things, and that's the problem. So we have a lot of collusion between governments and corporations. The problem is the government. If you get the government out of the way, the corporations aren't able to do anything that individuals kind of have a problem with. So corporations are always going to exist. Companies are always going to exist. And I have no problem with that because overall, they make our lives better. Everybody wants to rail against Apple, but how much better is your life because of Apple and Google? Your life is a million times better than it was 30 years ago because of companies like Apple and Google. Literally, I can order. I mean, we live in the most prosperous time ever in history. I can pick up my phone right now and I can order a pizza and it will be here in 15 minutes. I can buy something off Amazon and I can invest in cryptocurrency right here on my phone. And then, if I'm feeling like it, I can Snapchat with my homeboy in Germany and look for chicks. It's all, it's just, oh yeah, I got a lot of requests, man. Sorry. Kind of gotten, all right. So let me, you're right, Nitin, my bad. I got, you know what? It is getting late. So I'm not, again, I fall into this trap of kind of waxing loquaciously. So I'll just do gold, man. I'm going to skip nano and dash. I'll probably do those. I'll do those tomorrow, man. Where is Bitcoin headed to, Justin? Hey, Pepomax, thanks for joining us this morning, especially on Twitch. Thank you, my friend. If you want to, I did my Bitcoin analysis extensively for pretty much the first hour and a half. If you just want to rewind when the stream's done, again, I got about 15 minutes and I do want to do gold, so. Let's look at it on, I don't know if I want to do the contracts for difference. Yeah, I'll just look at it. Yeah, I mean, that's what you wanted. So contracts for difference on the Intercontinental Exchange. Start off at the weekly. It's been a while since I've charted gold out. How was that? So I had talked about this. I've been talking about this actually for quite a while. I think that gold and silver are going to be good investments moving forward. Again, the global crisis that is upon us, guys, and there's not a whole lot we can do to stave it off. We've already kind of exited that area where I believe that we could potentially grow ourselves out of debt. I was tentatively hopeful that could or would happen, but that time has passed, guys. The time has really passed. So let's look here and see. Just a reminder, you always want to start with the right side of your chart and then move to your left. Okay, I can kind of dig that. All right. Let's go look at our upside targets here. Just in the short term anyways. Breaking above that resistance. Then we're going to have this area right here. All right, so here's what I see, buddy. Let me check out the. So looking at gold on the weekly for the difference for the CFD, man, contracts for difference, intercontinental exchange. Here's what I got, man. It's actually, sorry, I want to add some more metrics to this chart because I'm not, since it's contracts for difference, I can't actually use the volume profile. Again, we are getting some interesting readings down here from the oscillators, but one thing at a time. So let's look at this right here. Okay, so on the weekly chart right here, we do actually see a pullback to the 618 Fibonacci retracement, which is your key Fibonacci retracement area. Again, you did see a lot of buying around that level. It did get a little bit of a rally. We did end up breaking down through it and entering this previous support zone right here. You can see it was tested once as resistance after it broke through, or excuse me. You can see the breakthrough over here. So you're putting in resistance, you have this consolidation period, and then you get that confirmed breakout right here as you're actually closing up weekly candles above your previous high. You get this nice little 20% rally right here. You do pull back to retest that area of breakout as support before you get your next extended rally all the way upwards, as gold did reach its peak back in 2011. Now, ever since then, gold has been pretty much on a decline. And what do we see now? We see gold in a sideways ranging consolidation period. But we did put in a higher low in 2015. We put in a higher low in 2016. And now we just put in a higher low in 2018. We put in 3 equidistant highs. And what does this mean? When we have higher highs, or excuse me, equidistant highs and higher lows. What pattern does that sound like to you guys? I'll wait. Don't worry, I'll tell you. ascending triangle, guys. Okay, so we can actually take this even further back and see that, yes, this is a key resistance level as well. We got a little bit of a break above it here, confirm resistance here. We do pull back when we start our ascending channel right here, resistance here, resistance here, resistance here. So one of the things about horizontal support and resistance levels and diagonal support and resistance levels too is that the more times you touch against them, the more likely they are to break. So looking at this, we can now take a measured move because now we've had 1, 2, 3, 4, 5, 6 touches on the trend line. Absolutely valid for the ascending triangle pattern right here. So now we can take a measured move. That's going to give us 28.24%. Looking where we are at in the triangle, we're a little bit further than that 50%. So we are looking between that 70 and 80% area to get the breakout. So if we did get the breakout at this level, we simply take the measurements from the low to the high. And again, I'm being conservative by measuring candle closes and not wicks. So that's going to be about a 28% movement. So let's assume that we do get the breakout of the triangle here. I'm going to have to zoom down a little bit. Let's assume that we do get the breakout of the triangle here, coming in around the middle of 2019. That's going to be a 28% movement. Pretty much back up to retest our previous distribution area right here, to retest our previous highs on gold. 30% movement in gold. If that ascending triangle pattern does end up playing out again, higher lows, equal highs that have been tested 1, 2, 3, 4, 5, coming up for a 6th test right now. Again, multiple ways to play it. You do see that we are in the lower section. We're actually crossing about the 50% line of this channel, of this ascending channel. So not the best area to enter, but not a horrible place to enter either. Again, you are expecting this to move up higher and complete. To actually retest this level of resistance. Again, you haven't got a confirmed kill by putting in a lower low after testing the resistance here ever since 2015, ever since 2015 ended. So you've done nothing but put in higher lows since December of 2015, and the same level has acted as resistance. So your liquidity is right here. So your red box right here is going to be your liquidity or your supply zone right here that the bulls do have to break above before we can really see these ascending things. You are coming up to the 50% retracement level. What would be extremely bullish is that if we did get a pullback, you kind of see the same thing here. You see this on the last rally. You see a rally up to retest resistance. Didn't quite make it all the way there. It was actually somewhat of a lower high. We do pull back right about to that 50% Fibonacci retracement, and we rally off that to really test again. This was quite bullish. However, it was a fake out for the bears, confirmed after you close down below your low right here, and that does fail and move you back down into that ascending channel formation. However, in the long term, you did still continue to put in higher lows. So as long as this pattern is playing out, I'm feeling quite optimistic about gold. Actually, this is confirming my bias on gold from a fundamental perspective. So I do want to put the trade on gold. I want to put the technicals in the lens of the fundamentals. Again, global financial crisis impending, guys. We cannot grow ourselves out of debt. We only have a couple options. Either we move toward a world reserve currency backed by gold, the most likely solution, or we move to a world reserve currency backed by cryptocurrency. I think that that is the long-term solution because Bitcoin or a better cryptocurrency, which has yet to come along, but I would be willing to embrace a better cryptocurrency than Bitcoin. They do have the ability to be a more technologically sound store of value. It is a better financial instrument. It is a better technological innovation of money. It is a better application of money. So human beings in the long run, not immediately, but human beings do as a culture tend to adopt the better form of technology for whatever purpose that we have in mind. So I think that human beings must end up eventually adopting cryptocurrency as their money, as their technological form of money, as their store of value, et cetera, et cetera. This is all congruent with Austrian theory of economics. If you guys are unfamiliar with that, go read some Ludwig von Mises, go read some Murray Rothbard. Will change your life as it changed mine. Start off by reading Atlas Shrugged. And you'll understand why the world sucks so much right now. From a psychological perspective, not from a materialist perspective. The world's fantastic materially. So Ascending triangle formation on gold, looking at the weekly chart right now. So my bet is on this baby to break out. Again, you are invalidated if gold does end up closing and breaking below this ascending trend line right here. Again, be a little cautious with your wicks, but this is the area that we're looking. We have not had a weekly candle close below this level since December of 2015. So that would foreshadow more movement down, and we would actually look to measure this on a down movement. However, I would be looking for a different pattern to emerge itself, or perhaps looking for a different formation completely. Again, we do have this supply zone right here, the one I was talking about earlier. This support line coming in around 1,062.41. And ultimately, if we take the range between previous resistance and previous support, that gives us this range right here, which is about just about a 10%, 8% range, 8 to 10% range of between 973 and 10,054. I think that this will most likely act as secondary support if we do end up crashing below this. If we do end up closing a weekly candle below this. Again, we do have to wait for the close below, the pullback to retest before we do get a confirmed kill. Otherwise, it's just a fake breakdown. Same when we're looking for the breakout trade. So you can either look to aggressively enter in these levels, or even wait for a pullback to retest this. However, that would be more bearish in my opinion if the bulls aren't able to continue this upward thrust right here. However, as individuals continue to run away from the stock market, I think that they will be moving more and more of their capital into gold. So fundamentally, I do want to place, just like I've placed my investments in Bitcoin, from a fundamental perspective as my first principle. So the fundamental perspective for my bullish bias on gold is the fact that it is the traditional world store of value when people are concerned with the stock market, and people are concerned about the stock market. Believe you me, guys. All right, so closing above that our current resistance level right here, which is coming in around 1,365 actually. And yes, I have somewhat fairly arbitrarily drawn that, but we do have our resistance zone coming in between 1353 and 1376. Closing above that, we do have a measured move pointing us all the way up to 1,582. So be looking to take the breakout trade on that bad boy right there. And I would be managing my risk at this point in time at that level. Ooh, 420, good level. And you can see I'm just managing my risk between your recent lows of the actual consolidation at the top, which was a distribution zone. So we will actually wait for the breakout trade if you're looking to take the breakout trade, and you would be setting your stop loss below the candle of the at the low of the candle that actually breaks and violates this line. Looking to tentatively enter with about 10 to 15, if not 30% of your capital on the initial breakout trade, and then you're waiting for the pullback to retest it as support before you take the before you invest the rest of your capital. Although you can also just scale into the position as it becomes favorable to you. Now, looking down at our oscillators, let's see what we do see. Very interesting that we do actually see on the Fisher transform a massive oversold level, guys. Coming all the way down to almost to below, to 6 standard deviations away below the zero line right here. Very interesting to see. You very rarely see huge... I mean, just look at the chart. You don't see anything like that in gold's history looking at the Fisher transform. That would have been a very strong indication to buy. So looking at basically what that is telling us is that the volume, the strength of this movement down was extremely violent, and basically placing price in an optimum area for individuals to go long, because again, you do see this nice bullish reaction and rally off that low, as well as you should very quickly moving into overbought territory. But you do have to take that with a grain of salt based on the fact of how oversold we became on the Fisher transform. We are bottoming above the zero line, giving us a very positive actual confirmation of that. Let's look and see if we see any divergence. We do get a little bit of hidden bearish divergence here, that good old bearish divergence. So we can see that we have a higher high in price action and a lower high here. However, this hasn't completed itself yet, so we'll just be cautious. Again, but if we look at the recent high right here, again, we do want to take this in with a grain of salt because the oscillator became so oversold at this level. Kind of honestly a weird reaction. We did get confirmation of that looking at our HD transformer as well, where price did actually move down to 2 standard deviations away below price, which is our classical oversold level. You can see that it gave us entries at all key areas of gold here, gave you the buy signal here, gave you the buy signal here, gave you the buy signal. And one reason that I do use Let's look at this. One reason that I do use the HD transformer as opposed to your RSI or stochastic is because of the lack of lag in the candle signal. Let's really zoom in here on the weekly chart and see when this oscillator would have actually given you the buy signal. So here it predicts the bottom right here by bottoming, and it gives you your buy signal right here. Compare that to RSI. All right, go compare that to RSI. Let's look over here. We're 2 standard deviations oversold below price. Where do you get your buy signal? Right here you get your buy signal. You're entered into this trade right here. On the close of this candle, you get a little bit of drawdown, but now you've been able to get all this. You are a little bit overbought right here. Let's see here. You do have a little bit of bearish divergence on your weekly chart here as well. So looking at the oscillators, fundamentally, I think that this most likely will go up. Looking at the chart pattern, we do have a range to go up. We have about 7% to go until the upper territory right here. We could, looking at the bearish divergence that we are seeing, honestly, on both of our oscillators, we could see a little bit of a pullback here to retest this level as support. So we do have this area coming in right here. We did back test it a little bit, but we didn't have a big delay in time from moving away from price. So as you can see, we did have resistance right here. We ended up breaking through. We only pulled back on one weekly candle to test it as support. So we haven't had a long time dilation in between breaking this resistance and testing it again as support. Kind of like you see here. So you have resistance, you're able to break out, you consolidate around that area for a little bit, you back test it as support, you actually have a stop loss hunt right here before you rally up, and you do pull back. See, look at the difference in time between the test of this support right here, resistance turn support, and so again, this is also your historical support level as well. And then this rally. Compare that to this, like you have one weekly candle where you do break resistance and then you pull back literally on the next weekly candle. That's your traditional entry, but looking at the bearish divergence is telling us that we do have the capability or the possibility actually to pull back down here and test this. A little bit of reaction from the bearish divergence actually. So short term, potentially a pullback here to test 1235.89 around this level to test this as support. Again, if that breaks, then we do have this ascending trend line to take account of. If we're actually able to close weekly candles below that, that invalidates the chart pattern. Otherwise, fundamentally and technically, I do believe that gold looks quite bullish, looking at potentially taking the breakout trade or aggressively entering around this level right here as well. Just for the pattern play up to the upper area of the pattern, which is coming in around 1367.38. Or again, you can take that breakout trade several different ways to take that as well. Yeah, I do want to point out that bearish divergence. So you have a higher high in price action here, but a lower high on your oscillator. You also have a higher high in price action here and a, let's look at our Fisher transformer. You do have a higher high in price action there. Okay. So the bearish divergence is not confirmed. Again, I am generally looking at the Fisher transform for my divergence, and I'm generally looking at my HD transformer for entry and exit. Because of the way it manipulates RSI level, I find that it is not as congruent with looking at divergence. However, you do see it right there, and it can play out. So waiting for the time transformer to actually confirm the bearish divergence, I just do want to point that out and put that on the table for you to be prepared for a potential pullback to retest this resistance level as support. Also, your historical support level here and here. 1, 2. Cool. Okay, I can see it. So hopefully that's clear. I'm not going to publish this. I actually do want to do some more work on my Zhao chart here. So I'll do some time. I'll spend some time with this, and I'll actually get with Alex because Alex has some really good gold charts. But this is just what I see, giving it a quick fundamental glance. All right, let's get with the chat. Hugfest says, hey man, what would you do with your fiat if you get a big profit knowing the market is about to crash and banks are not reliable with depression? Where would one move his $1 to $2 million in fiat, gold, silver, and Bitcoin, man? Gold, silver, and Bitcoin. And then I would make sure that my house, supplies, bullets, bandages, Canned food spam, I'd make sure that all that's stocked up. Kind of like what my garage looks like right now, honestly. Drew 216, I got you, man. Got you in the X42 drawing. Not the drawing, you're going to get some X42. So let's see, that's 1, 2, 3, 4, 5, 6. All right, I got all the spots filled, guys. Don't have room for any more X42 guys. Do I trade gold? No. I used to. I used to trade the futures, but it's a much better hold right now, man. CryptoMex says gold all-time high. Yeah, I definitely think so. Hey, Mr. Hut QC, thank you so much, man. I did, you know, I'm going to call that background color like denim blue, but it is my calm trading setup, and I do like it a whole lot better, guys. I want to thank Malicious Upload for actually helping me with the color palette and helping me color coordinate my chart. So hopefully you guys can see it a little bit better, man. Hey, thank you so much, Gage. I highly appreciate that, man. Hey, cigar date. Hey, what's going on, man? Nitin Soki says, thank you, ... Well, hopefully that's better, man. What inputs do I use to calibrate the Fisher transform? So you do want to calibrate the Fisher transform across, depending on what you're using. Again, the HD transformer, I don't have to worry about calibrating because it uses the Hamadime discriminator, so it automatically calculates for me. But for the Fisher transform, I generally use 6, 7, 9, and 10, depending on what I'm doing. Now, something like gold. Let's look at gold. This is what Alex would tell me to do. He would tell me to use 52. And he would tell me that I would get much clearer entries and exits just using the zero line. Just using the zero line, looking for crosses above the zero line or crossovers in the oversold regions right here. So let's look and see actually if we do see that. Oversold entry, oversold entry, oversold entry, oversold entry, short. Kind of get you in a pickle here on this long uptrend, on this really strong uptrend. That started in 2008, ran to 2011. That was I got involved in trading in 2008, so that was the big bull run of my early years. That was really the only way that I profitably made money, was just like buying and holding gold throughout that period. And then I pretty much got murdered in the stock markets for the first 2 years, but cut my teeth, found a good mentor, and then I just learned that I needed to take. The first thing that I learned was just take everything off the chart, man. Take everything off the chart and start with the basics, man. So yeah, K7. Hopefully that's the answer to your question. Again, this is the particular script that I use. When you're looking at something like a weekly chart or a 3-day chart or a daily chart, 52 actually I find can be very, very cool. Alex has shown me some really cool applications of this, but me personally, I use 7 as my default. I find that it tends to work like quite well. Gives me my positional trades quite well, my entries and my exits, because I tend to be a more active trader. Again, play around with it. It's kind of like adjusting an analog radio, honestly. You are measuring the length of the wave, so. Anyways, guys, it's 10 after 1. I do got to be going. So thank you so much for joining me this morning. Hey, Dyson Zero. Hey, good to see you, man. Nitin Soki, you are being promoted, man, to moderator. And 12/22/2020 Dream. Promotion, my friend. Welcome to the moderator team. And Dice N0. Welcome to the moderator team, man. All right, guys, so if you have any questions or you'd like to see the Bitcoin analysis, you can always review the tape if you're coming in late. And now, let's pay the bills. All right, guys, I do want to thank you so much again for joining me. If you guys are supporting the stream, if you guys do like the content, make sure you hit that thumbs up button on your way out. If you're over on Twitch, I'd highly appreciate a follow, or if you have Amazon Prime, if you give us one of those free subscriptions, helps us keep the lights on. We highly appreciate the support. We are looking to add a lot of cool stuff to give value and feedback to our subscribers and supporters, as well as we always do, guys. If you guys would like to receive more value for supporting the stream, head on over to crackingcryptocurrency.com and check out our merch store, guys. Again, drinking my morning coffee out of the Kraken Cryptocurrency HODL mug, and let me tell you about this beautiful baby right here. You go over to thekrakencryptocurrency.com, click on merch right here, go to accessories, down to mugs and drinkware, and let me show you this, the most magnificent and fantastic of all beverage vessels right here, the HODL Kraken Cryptocurrency coffee mug, guys, $15.99, and this magnificent beverage vessel can be yours in all the majesty that it does encompass, guys. We do get a small kickback from the sale of the merch, helps keep the lights on. We do highly appreciate the support, guys, but if you do drink your morning coffee out of this, you will be 80% more successful in your trading and 90 to 95% more attractive to the opposite sex or the same sex. No judgments here. It's all good, guys. But we do appreciate the support, and please go stop by the merch store and help us out if you feel so inclined. If the bear market has got you down, if you're looking to start 2019 off on the right foot and increase your trading skills and profitability, then consider joining the Kraken Cryptocurrency Premium Trading Group. You will get access to our premium and proprietary signals, trade setups. So all the signals and trades that we take from all the analysts and traders on the team at Kraken Cryptocurrency, it's not just me. There are other traders that help provide value to this wonderful community that we do have. We do put out free signals. You'll get far more signals, guys. You get access to us. You get access to our commentary on the signals. You get access to our justifications, our charts, time frames, our risk management, how we're particularly playing that out, all designed to help you spot and see profitable trade setups for yourself. You'll also get access to the private Discord, the VIP members lounge, and the VIP day trading voice chat as well, so that you can interface and chat with other successful traders, learning traders, and analysts and traders like myself. You will also get access to custom curated news, so no more looking for news that you think is going to be fundamental to your position. Scott curates that all in-house and puts that out every day. You'll also get access to premium. Hey, Michael Fariello, thank you so much for the sub on YouTube, man. Welcome to the community. Glad to meet you. You'll also get access to our premium technical and fundamental analysis, again, from all the traders and analysts at Kraken Cryptocurrency, one-on-one trading and support. You'll also get access to our webinar course series, which is designed to teach you all you need to know to be a profitable trader, to take you from zero to hero. As well, you'll also get access to your own customizable trading journal. You'll also get access to our live tracking sheet to live track our calls, and you'll also get access to our resource library, which has PDFs, webinars, courses, seminars, workbooks, everything, again, designed to help you become a profitable trader, guys. Currently, the Christmas sale is over. We are back at our regular pricing, so for $100 a month, you can get access to all that. Killer deal, guys. All right, so that's all from me, guys. If you have any questions, comments, concerns, sarcastic remarks, and/or death threats, as always, feel free to leave them in the comment section down below. You can reach us at contact@krakencryptocurrency.com or DM us in the Discord. We're very easy to get a hold of. I am going to be sending out the X42 for the giveaway here right after the close of the show, as well as updating the tracking sheet and getting with the members and looking at the current signals, guys. So you guys have been fantastic. I hope you guys have an enjoyable day. Happy New Year's to you guys, and thank you so much for spending your morning with me. I've been Justin Wise, and I'll be here tomorrow. Kraken Cryptocurrency.